Welcome back to the Traders Network. I'm Michael Yorba, your host. Thanks for joining us. We're also streaming to you live on yorbamedia.com. All right, my guest this segment, Nick Santiago, President and CEO of In the Money Stocks. Nick, welcome back to the show.
Great to be with you, Michael. Thank you for having me.
My pleasure. You want to start off talking about the oil market today, huh?
Yeah, I want to talk a little bit about the oil market. One thing I think traders should do is really follow crude closely. Crude, as you know, sold off, I guess really you could make a case on the 14th of this month. And then basically on the 17th, which was Monday, we had a really sharp sell-off on some volume. Now you're hitting a little bit of a support level on crude, especially on the USO. A lot of traders that don't have crude futures charts can look at the chart of the United States Oil Fund, which is ticker symbol USO, and you'll see you're hitting some support here. But the point I want to make is that often when crude sells off like this, it's a sign that the overall markets may be getting ready to turn. And I think something that traders should watch for. I don't expect any, and we talked about this last week, any major correction or any major collapse in the market. I think you're just going to get the excess buying that has been taking place to wear off a little bit. You're going to shake out some traders, and then the central bankers will prop this thing right back up again. But in my opinion, oil, if you overlay a chart of oil and the S&P 500, you'll see that every time oil has sold off, the S&P followed in a not-too-distant future.
Okay, so you're expecting a pretty good pullback next week?
I don't think it's going to be a huge pullback, but I would not be surprised. In fact, I'm almost betting on a little bit of a pullback. I don't think it's going to be the greatest shorting opportunity in the world because the spiders or the S&P cash goes to around 1,400. There's going to be a wall of support there. So again, I do think though that we probably start to move lower a little bit, and I think that the S&P 500 has probably made a pretty significant move already, and it could digest these gains for a little while.
Okay. I had a cycle day that I posted on my blog for tomorrow, and if we rally into it, I was thinking we may have a nice little top on that. You mentioned 1,400. Do you feel comfortable about that being a pretty substantial support level?
I do, and I think that we could probably trade as low as 1,390, 1,380, but in there, I'm going to be buying this market with both hands.
Okay. And the upside after that, what are you thinking is going to happen?
It's unlimited because you have an open-end quantitative easing. I've already got a bullish cycle going into the fall anyway, so I think after this, mild pullback, and originally I was expecting a hard pullback in the S&P 500, a hard sell-off, but now looking at how the tape is and how these markets have played out, I can't look at it like that anymore. But the upside is basically unlimited, but it's going to be more about time than price, in my opinion. But, the market's going to go up, and it's going to try to attack the, mid-1500s.
That's pretty conservative for you. That's a conservative number.
Yeah, I just have to take it one day at a time at this stage. That's the best way to approach it as a trader's view. There's just so many problems out there. Outside of quantitative easing, you have to get your head around. You have to trade what you see on the charts and not what you think. So, again, I'll just take it one step at a time. But I'm not going to pick some crazy number out there because I think that, this is the central bankers going all in on the poker table. They're taking all their chips, putting it right in the middle. Things have to be pretty bad out there for them to do this.
Yeah, they're going to have to do something to make this thing to keep their jobs, if you will, because there's going to be a big changing of deck chairs if they don't, right?
Well, I think there should be because you're crushing the dollar, you're hurting the saver, you're also punishing people around the world that need the U.S. dollar to buy goods such as food and commodities. So. I really honestly believe that, the inflation that they're creating out there is dangerous, just outright dangerous.
I agree with you. We'll get into the markets talking about inflation later, but I want to cover some of the different markets you were talking about first. Apple next.
Yeah, Apple, I see no strength in this stock. Again, I think 700 was a shoo-in this week because of the options expiration, but this thing continues to go up on lackluster volume. I think it's just all institutional distribution. In fact, if you take a look at August 21st, it was a high-volume sell-off. Then if you take a look at September 10th, another high-volume sell-off. The stock rebounded right away. This is how institutions feed out stock. Again, if you bought 10, 50 million shares of Apple, you can't go out there and sell it at a limit order. You have to feed it out to the market, and they're feeding it right now, and the public is buying every nickel of it. So once again, the public's going to get hurt by this stock. When this thing comes down, it'll go to 620 quickly, and then after that, it could go down to the 475 level.
Okay. All right. So market makers propping the stock up so the institutions can get out. Got
That's it. It's the institutions are distributing the stock right now. I don't see any strength in this thing. Traders should beware.
Okay. All right. Well, good. At least the warning signal's out there. All right. IYT.
Yeah, the IYT, pretty important to follow because this is the Dow Jones iShares of the transportation index. This thing has been mauled. Now, if you take a look at the Dow Jones Transportation Index, you'll see it's down 143 points today.
Mauled is putting it politely. That's a pit bull had its way with this thing.
You sure did. It sure did. And, you see stocks like the rails today, whether it's Union Pacific or Norfolk Southern, just getting absolutely decimated. FedEx is warning, lowering their outlook for the rest of the year. So you got a lot of real negative sentiment, but this here is now coming up into pretty good support. So while you could get bearish, it's still an options expiration. I think this thing is ultimately going to head lower, probably into the 86 level, but there is some short-term support right around this $88 area at the moment.
Okay, so no, this may not be a trading range and the low end of it. You're thinking it's going to break that September low? I
do think it is, but you're probably going to get a little short-term bounce first. Next few days, and then I think it can break lower into the 86 level on the IYT. And if you're looking at the cash Dow Jones Transportation Index, right now it's hitting support at around the 4950 level, and then it's down to around the 4800 level ultimately.
All right. Well, this week it's actually below the 50-period moving average on that, so that's definitely on that one. All right, J.P. Morgan, one of our favorite.
Yeah, J.P. Morgan, this is really the barometer of all barometers, has a bullish consolidation pattern in there for the most part right now. But one thing I like to tell my traders, and a lot of my traders know, and they saw this firsthand today in the chat room, about how these bullish patterns at extreme highs can fail. So I think traders should be aware of this pattern that's in on JPM, even though it's a bullish pattern. I would not rule out a pullback. If any pullback happens on J.P. Morgan, it's basically going to be down to the 37 level, though it won't be much more than that. As the inflation rally lives on, and the first people that benefit are the banks.
Okay, so you're thinking we've got a short-term top here on the J.P. Morgan.
I think you could have a short-term top on everything, but to be honest, Michael, I really thought that we weren't going to get QE3 when we did, and we did. So, I ultimately can be wrong, but I really think that everything looks short-term toppy here.
Okay, but 37 on the low, just to recap on 37 on the low, may be a decent support for this bank.
It's going to be a pretty good support level because that was where the stock actually broke down when it had reported that big trading loss. Then it was able to break through that level. So I like to call that the scene of the crime. Markets or stocks love to go back to where they once were, and that would be the big level there, around the 37.50, 38 level.
Okay. Yeah, I'm just eyeballing the weekly chart here, and it looks like we're at somewhere close to about a 78% retracement on a longer-term chart using the March highs of this year.
Right.
And then I guess that the 37, that makes sense. Do you think that this QE3 is really going to, I think it might, just common sense, but take the banking sector and really push it through the roof going into the end of the year?
Well, I think after a pullback, and believe it or not, I think we could pull back for quite a while, but you're going to have to build some pressure because there's no shorts in this market. These market rallies that have been implemented by the central bankers have been all short squeezes, and then they take it up a little bit more. This time around, Bernanke did this at a high. I don't think there's a lot of short squeezing, so I think the banks will rally into the end of the year, but they're going to need to pull back first.
Okay. All right. No, well said. Good setup for the next trade, which they can get on, by going into your room. But before we go, we got a minute or two left here. The TLT, we've got a little pullback here. I'm looking at a longer term chart, and it just seems to me that we should be seeing a lot more money coming out of the bond market and fueling the stock market. I still wanted to get the pulse from you on this.
Yeah, well, I've traded this successfully for a number of years. I believe that the TLT now, the way that it's broken through the 120 level on a close, earlier last week, I think that was pretty significant. But I still think that this can rally right back up to 128, 127 with no problem. I really have a hard time now seeing it break through there, though. With all of this quantitative easing, I just don't see the fear out there. I think that the fear is just going to be just a lot of trading going on, but I honestly don't see the TLT right now getting above the 128 level. If it did, I'd have to change my opinion, but right now, that would be the maximum upside that I can see in this.
Okay, I get it. Overall, more bearish on this, selling the strength unless it breaks 128.
Yeah, it gets up to, you could trade this thing probably into the 127, 128 level, and there, you probably could reverse it and buy a TBT, which is a double inverse short the bond market. So right now, I really have a hard time seeing this thing get above 128.
I got it. All right, we're about out of time. Before we go, though, let everybody know how to get into that trading room of yours.
Yeah, come on over to InTheMoneyStocks.com. Take a 7-day free trial to our research center. You'll get all of my cycle work. You'll get all of our trades that we do, all of our swing trades. And if you're a day trader, you want to come over, take a 7-day free trial to our intraday stock chat. Just today alone, Michael, we pulled off about 7 successful trades back to back. I put out a morning video with trade setups before the market even opens. They were all bullseyes today for good profits. Traders, just give it a shot. You have nothing to lose.
Hey, I wish we could have talked about those too. Well, we'll have to make room for that next week.
Sounds good, Michael.
All right. Thank you so much, Nick.
Have a great day.
You too. Everybody, Nick Santiago, President, CEO, In the Money Stocks. Yeah, he's not joking. 7 successful trades. This guy knows what he's talking about. Check out that trading room. It won't hurt you. You might make some money.